Hi traders, welcome to this video. Today I want to talk about stop losses. I get a lot of questions from you guys about stop losses. Where should I put my stop loss? Are there any secrets about stop lossing? What's about algorithms which are specialized to find stop losses, etc., etc. So there is a lot of discussion ongoing about stop losses, and there are a lot of myths about stop losses. And first of all, what is the job of a stop loss? I have a special definition or opinion about a stop loss. A stop loss for me is my absolute insurance against bigger losses. I personally accept a loss of, say, 7% instead of having a loss of 30, 50 or even 20%. So a stop loss for me is really the last barrier. The last barrier, and it is also for me a situation when I definitely want to be out of the trade. So if my stop loss point is reached, the trade is not valid any longer for me, and I want to be out. The job of a stop loss is not to have the minimal or to realize the minimal loss possible. The job of a stop loss is not to take you out of the market if your trade shows a loss of, say, 1% or something. So you don't want to be shaken out of your trade with your stop loss on a normal reaction or on a normal correction. And one of the biggest secrets of right placement of stop losses is entering right. So I selected an example here, and that is Cooper. I used it also in some of my previous videos, and Cooper had this very nice double bottom pattern here, and it is a good example to show you the principles. So if I, for example, enter the Cooper trade on that bar here, I always try to make sure two things. The first one is I want to enter as soon as the price breaks out above this previous high. So I buy as close as possible to the breakout line. This is very important, because if you buy too late and the price is already moved, say, 5 or 10% above your breakout point, in that situation, the best stop loss will not help you if the trade pulls back or if there is a minimal correction. So try to buy as close as possible to the breakout point. And the next thing I do is I place my stop loss at around 7%. So that means maybe I enter here at 68. That means I place my stop at around 7% here. I do not try to be a perfectionist here. So it's not my job to find the real perfect stop loss point. It's only a thing or a protection if, for example, I'm not sitting in front of my PC and there is a news or something and Cooper immediately go down 20%. In that situation, I want that my stop loss take me out of the trade. So I don't try to find the perfect stop loss point. I place all my stops around 7% below the price I bought the stock, not below the breakout level, below my entry price. There are some exceptions about that. For example, if I enter a trade on a gap, or if I chase a stock a little bit. So if I, for example, would enter here at $70, I would place my stop at 7% too. But if I, for example, buy into this gap up here in that situation, and I buy it maybe late, this is just an example, I would never buy this bar here, but if I would do that, then I sometimes can extend my stop loss maybe to 10%. But in that situation, my position size is always smaller. I would never buy a full position when I have a 10% stop loss. The thing is, only a very, very few trades reach my stop loss point. I exited the most of my trades before my stop loss is reached. This is very important. And as I said in the beginning, I want to be, I want that my stop loss is really the last barrier. It's my last insurance when I definitely want to be out of the trade with no doubt and no discussion. And I personally always sell before. So, and in that case now the stock goes up to the upside, but you can see that after entering the trade the price pulls back and undercutted the lows a little bit. So, and say I entered here around 68. So you can see that it pulls, pulls back around 2% below the price. That would be a situation where I personally get a little bit nervous and I start to monitor the price. Because if it pulls, or if it, if the price goes 3% below the breakout line here, I would maybe start to sell a portion of my trade. So I always try to be defensive when I enter the stock. And sometimes I start selling during the day. So if, for example, the price go below 3% below the breakout line, and if the volume is also strong, that shows me that there is weakness inside the stock, and then I maybe sell up to 50% of my position. Sometimes 30%, sometimes 50%. It depends a little bit on how's the market situation and how is the situation in the stock. But I always want to be defensive. And when the stock then made a nice reversal and come back above the breakout line, I immediately buy into the stock again. So I have no problem to sell and re-enter very quickly because the trading fees are so cheap, and I rather have a small loss and then a great defense, so I protect myself against bigger losses, than having a bigger loss in a trade. And I have no problem to re-enter very quickly. So I make sure that I always play a great defense here in that situation. If, for example, the price would close below the breakout line here, I sell 50% at the close. So I don't want that the price closed below this breakout line. This is a situation I want to be avoid. So, for example, if you look at this bar here or that bar, or don't know, this situation here, if I would or if I had bought this situations here, I definitely had sold 50% of the position at the close. And if then the next day the price goes up, and then I will buy back into the situation. Okay, now imagine that you are in a great trade like Cooper here, and the price is going up to the in your preferred direction. You now have two things. The first one is you must move your stop loss to break even. That means you must move your stop loss to your entry price to protect the trade against losses. So it is not a great situation if you have a nice profit in a trade and then your stop loss point is reached and you sell for a loss. So I personally move my stop to break even if my profit reaches around 20%. So that means I have a 7% stop loss here in that case, and if now Cooper went up to this level here around 20%, I definitely move my stop loss to break even. In the most situations I do that earlier depending on the price action, but in that case I want to have a break even trade. Another thing is I also use time stops, and time stops is very difficult because you never know when to sell, and I don't have a fixed time period, something like 1 week or 2 weeks or something, but I mostly sell the stock if it goes sideways after an entry, say for about 5 to 10 days. In that time period I sell at least 50% of my trade, sometimes more, or I close the trade completely. It depends a little bit on the price action. If it's constructive, I maybe hold some shares. If not, then I would sell it. But you also need a time stop because you don't want to waste your capital in a position which is going sideways. A good example of that is, for example, is here, something like that. In that situation, you can think about to reduce your position size, which is very similar to that, to don't waste capital in a sideways market. Okay, a third stop I use is trailing stops, and I use trailing stops to protect profits. You can see that in the case of Cooper, the price did a very nice rally, and I always use this EMA 65 here as a trailing stop, and that means I'm not moving my stop loss order, so I put it to break even, and then I monitor the price action around the EMA 65. So, and I don't sell the stock if it closed below the line, or if it touched the line. I sell the stock if I see that the price action is well below the moving average. So for example, in that case I will I held the stock up to that situation here, and in that situation you can see that there was a failed breakout before, which is a definitely sign for weakness, but in that situation you see a first close below the EMA 65 since the beginning of the rally, and this is a very bad situation for me. And in that case I sometimes sell a portion of the trade, so 30% or 50%, even more, but in that situation I do definitely one thing: I move my stop loss below this low of the day, which closed below the EMA 65. This is important because in that situation now a selling mode is activated for me. I want to be very defensive, I want to be out of the trade, and in that situation I move my stop loss order very close to that level here. And then I got taken out of the trade here, and you can see that it's sideways action and then build a new pattern, and then you can re-enter the trade. So let me say one thing about this myth of stop loss hunting by algorithms. A lot of people on social media write about this topic, and in the most cases I really see very quickly if the person has some knowledge about the stock market or not. For me, it is absolute unimportant what algorithms do. I don't think about algorithms because it's a world of trading which has no place in my world. Algorithms don't play any role in my trading. You know, they are on a very short-term level, they are on a micro level. Yes, of course they have an influence on the price, but they don't have any influence on my trading, and I don't spend 1 minute thinking about what could an algorithm do. Maybe there are some secret people in the world who write algorithms to hunt stop losses or whatever, but in that case really they are not interested in you as a retail trader. They are interested in liquidity, and we as a retail trader with our orders around 100 shares or maybe 1,000 shares are not important for them. They are going for the big fishes and not for the small ones, and they are used by the big fishes. So, and really, if you place your stop loss 7% below that point, there is no algorithm who take out your trade. So, and the thing is, if you trade liquid stocks which have at least $20 million daily traded dollar volume, or at least 300,000 shares per day, these are liquid names, you know. Of course, if you trade penny stocks or if you trade cheap stocks below $10 or with a very illiquid intraday trading, in that situation, it seems like that somebody is taking out your order. But that's not the truth. The truth is that the stock is so illiquid that every larger order from an institution is really moving the price. And those stocks, those small caps, micro caps, etc., they are very volatile. And I personally don't trade them, or very rarely trade them. And because of that, sometimes they go up 20% and then go down 15%, and they take out your stop losses in that point. So the only thing is, if you want to trade such illiquid stocks, you have to find a stop loss strategy which fits to those stock. This is very important. You must always try to make sure that the components of your trading systems are in sync with each other. You know, in my case, I trade mid caps, I trade small caps with at least 1 billion market cap, and they must be very liquid. And in that case, I can easily place a 7% stop or maybe a 5% stop, because those shares are traded and supported very good intraday. So maybe just one word, why a 7% stop loss and not a 5% or 3% or whatever. I think 7% is enough distance from the entry level to avoid getting shaken out by normal pullbacks or normal transactions. The second thing is I use 15% positions. So a normal position for me is around 15%, and you can see if you have if you risk 1% of your trading capital per trade on a 15% trade, and you have a 7% stop loss, in that case it's around 1% of your trading capital if you get stopped out. So this fits also. And yeah, as I said, this is really my last insurance, you know, and I always get out if I can earlier. So I mostly get out at around 3% with at least a portion of my trade, and at 5% I sell more, and etc. And so I reduce my average loss in my trades. One another point I don't want to forget is mental stop losses or hard stop losses. A hard stop loss is when you have an order in the market, a stop loss order. I use both. I use a stop loss order for the protection, so for my last insurance, and I use also mental stop loss orders to sell earlier. And I'm a really big fan of alarms. So here in TradingView and also in other trading platforms, you can use alarms. And in that case here of Cooper, I place an alarm here at that level. So, and I can notify on app and send email and whatever. And this is very closely. And if now the price drops below that level, I get a notification. And then I can zoom in and look at the price intraday and look how the volume is, and then I can decide if I sell that. And I also can move these alarms and get notified when the trade is breaking below important levels. And this is what I use also intraday when I'm not at the PC, and then I look into my trading platform on my smartphone or on a PC, and then I take action. Okay, then there was a very detailed video about stop losses. This is a very, very big area, and I maybe can talk about that for hours. But I hope that I included the most relevant topics inside this video. You can follow me, of course, on YouTube, and I recommend to subscribe to my free newsletter. I always give trading tips, and I always give some names from my watch list every Sunday. And you can also follow me on Twitter. I tweet a lot trading tips, and I tweet a lot charts, etc. on my Twitter account. So follow me.